JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 8th of March 2021, so yep, welcome everyone guys. Welcome to this Monday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into anything here, guys, I would like to say, if we do have ladies watching this video today, so yep, happy Women's Day, ladies, yep, I hope this day, although it's a Monday, it's kind of is a bit of a difficult day, but I hope this day is going to be very, very well and very good and just wonderful for you. So yeah, once again, happy Women's Day, ladies, and I hope you'll enjoy this day. So as I said before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So now then, jumping into the first chart here, and that's Nikkei 225, and well, as we can see here, the index drifted lower today and closed in the negative territory. Yep, in a way, so far, this idea kind of is partially working out. So the idea basically was to see a nice rebound here from this from this key support zone near the 28,326 territory, and we got that, and it moved higher. But as you can see today, it kind of drifted back down a little bit. However, it didn't really get back all the way here towards this key support zone. So for now, this idea is kind of working out, I would say, still. So let's see if we can get a bit of a push back here towards this downside line drawn from the high of the 16th of February, and if we do get that, then we'll take it from there. For now, it's this is going to be interesting here to watch if we can continue trading somewhere around here, and if we can actually get a move back up to this area. Now again, this is one part of the kind of one side of the coin here. If in case, let's say, this idea starts not working out, especially when we get closer to this hurdle again, this 28,326. Now of course, be very careful and be very cautious near it, because if we get a break below this will confirm a forthcoming lower low, and well, it could open the door for a larger correction to the downside. Initially, of course, we'll target this key support zone around the 27,600 zone, and if that gets cleared, well, the path could lead to the 27,000 mark, or this upside support line drawn from the low of the 19th of March, and then we'll take it from there. Now, jumping into Shanghai Composite very quickly. So this one's a little bit more devastating, or at least the technical picture looks a little bit more devastating here, especially for the bulls. Yep, we saw the index pushing kind of back up above this upside line, but then failing and losing ground. And well, the most important here is that we've managed to not only break back below this upside line, but also dropped below the 3,446 territory, the one that I talked about recently, and that's the low of the 29th of January. If I'm not mistaken, that's the lowest point of January. So, long story short, we managed to get a break below this. We managed to get a close below this as well. So, in a way, now this is kind of opening the door towards further declines. And my next target here, let me just put this on the chart, will be this one right here, the lowest point of December, and that's roughly around the 3,325 mark, not far from the 200-day EMA. So basically, first we could probably test the 200-day EMA, and slightly below that we do have this other key support zone near the 3,325 territory, and yep, we'll take it from there. Jumping into German DAX, so the index is, or should say was, trading in the red well, actually on Friday. In terms of the week, it also closed in the red, and as you can see, the most important is that it's still struggling with this this downside line drawn from the high of the 8th of February. Now, if we take a look at the cash index right now, we'll see that the price is just fractionally above the psychological 14,000 mark. Now, it's basically somewhere sitting somewhere around here, but still below this downside line, below this hurdle, the one that I mentioned previously, this 14,050 territory. So, what I'm going to do here is that, given that we are again close to this downside line here, I'm going to wait and see. I'm going to just check if we're going to actually get this break here through this downside line, through this 14,050 territory. If we do see that break here, then yes, we'll go for the upside again. But if we don't, well, I mean, we could see a slide back down here, and maybe even a test again of this 13,830 zone. But if that gets broken, well, I mean, this could maybe clear the path towards a bit of a larger correction to the downside. So keep your eyes on that one. Now I can see in the chat room, good morning from Kirsten. So Kirsten, good morning to you too. I don't know if you joined the video from the beginning, but basically happy Women's Day to you and for all the other ladies here in this room. So yeah, I mean, I hope you'll have a fantastic day today. So yeah, happy Women's Day. And jumping back into NASDAQ 100 here, the index did recover on Friday nicely, I would say. So it did test this 12,226 territory, marked by the lowest point of December of last year. And yep, it rebounded from this area, traveled higher, but still kind of ended up being below this area, below this 12,758 territory right here. And as I mentioned before to you guys, that's kind of the little neckline, I would say, here of a possible head and shoulders pattern. But again, for now, probably we'll have to just kind of skip this whole head and shoulders idea, because in a way we saw a bit of a retracement. Okay, so that's good. Today we're seeing, this morning, looking at the cash index, we're seeing that the price is trading around the 12,519 zone. So basically it's back below Friday's close, and it's trading somewhere around, or actually slightly below the 100-day EMA. So maybe even actually this idea could work out of the head and shoulders pattern. But again, let's not rush into anything. Again, the steep slide right now, which is happening on the cash index, is happening early in the morning. So maybe we will see a nice retracement here back up. However, in terms of the retracement, yes, we could see that retracement to the upside, but be very careful near this downside line, which if remains intact, and this one's drawn from the high of the 16th of February, if that remains intact, another slide here could be possible. It is a bit of a difficult here situation on the NASDAQ 100. Now, on one hand, you do see a falling index, and basically, yes, I mean, a lot of people probably are thinking to jump in, but still the the thought in the back of your head is thinking that actually isn't this just a part of a bigger correction, something that we saw here, for example, in September or even in October. So yeah, I mean, of course this could be the case. So that's why probably it's easier to just kind of go level by level. And in this situation here, if we do see a push back above the 12,758 territory, yes, I'll aim for slightly higher levels, but only up until this downside line. If this downside line gets broken, now that's where it could become a little bit more interesting for more buyers. But given that the price is currently trading below the 100-day EMA again, now this of course increases the chances for something like this happening, that even if we see a push higher again, if this barrier here holds, then another slide here could be possible, maybe a move towards the 200-day EMA even. So yeah, let's keep an eye on that one. You can see in chat room here, Absolutely, good morning to you too. I hope you're having a wonderful start of the day. So coming back to the indices, and this one's the dollar index, and it continues to push higher. So we've managed to clear this this area, this resistance area between the 91.60 and the 91.75 territory. So yep, in a way now, I mean, everything's kind of pointing towards this 200-day EMA, but which is quite possible to reach, given that we're also trading above this upside line here, drawn from the low of the 25th of February. So in a way, everything's kind of leaning a little bit more towards the upside, especially if the indices continue to drift, if the indices continue to drift lower. So because nowadays kind of the US dollar is kind of seen as a bit of a safe haven. So yeah, let's see how all this is going to play out. But again, I'm not dragging this one way too much to the upside. I'm just aiming for the 200-day EMA initially, and also around there, as you can see, we do have this little tentative downside line drawn from the high of the 25th of September. And yeah, I mean, this is also where it could stall, and we'll take it from there. If it pushes above it, yep, wonderful. But if it stalls there, then I'm going to be a little bit more on the careful side. And a level to watch around there could be this one right here, the high of the 23rd of November, near the 92.80 territory. And as you can see, it perfectly coincides here with the 200-day EMA. Now, jumping into gold very quickly. So if the dollar continues to kind of rally and push higher, then, well, of course, I mean, you could see this the yellow metal drifting back down. So so far, I'm kind of aiming for the downside. This idea is kind of partially working out, so we did get a bit of a small little correction here to the upside. But to be honest, my main target for now is the 1670 territory and this upside support line drawn from the low of the 20th of May of 2019, and then we'll take it from there. So basically, long story short, this move lower here still could be seen as part of a larger correction to the downside. So yeah, and if we do see this area getting tested, then we'll be very careful. Maybe we'll have a nice rebound. If we don't, then of course we'll start looking at some further declines, but yeah, certain criteria will have to be met as well. In terms of the upside, I would prefer to maybe wait for a push at least above the 1760 territory here, and yep, at the same, I mean, here, if we do get a push above that area, 1760, then my next target is the high of the 7th of August here, or sorry, not the high of the 7th of August, but the downside line, which is taken from the high of the 7th of August here, and then we'll take it from there. Jumping into Brent Oil, so continues to pop higher. Look at this. I mean, it tested this 71.28 zone. I talked about this one, and that was the highest point of 2020. So yeah, we managed to reach that area this morning, tested it, and I think even overshot a little bit. So let me just double check. Yes, we did overshoot by a little bit, but I mean, you can see that the bears kicked in here and drove this one back, kind of a little bit. I wouldn't say all the way back down, but a little bit to the downside. But still, the overall, on the day, the commodity remains positive. I'm not. Well, I mean, yes, we could continue traveling higher here, but to be honest, I would prefer now to see maybe a strong move here above the 71.28 zone, because again, this is a key barrier. It just proved once again that this is a key barrier to watch, and if we do see that daily candle staying above this, then yes, of course, higher levels could be met. But if it struggles, I mean, if this is the point where we'll see a bit of a corrective move here to the downside, then maybe, yep, that could be a good idea. I mean, could be healthy. However, again, I'm kind of always pointing this out. Don't rush into anything, guys, yet, because again, it could pop higher. I mean, it could just give us another strong boost here and then maybe reverse back down. So, and also something to keep in mind, that sometimes when we have formations like this could be but again, potentially this could be the beginning of a formation of a nice head and shoulders pattern, because we can see we could have our left shoulder right here. We have this already kind of part of the neckline building up, and this another stronger boost here could push the commodity towards higher levels. I mean, to create that nice head and then reverse maybe back to the downside. So again, I may be getting a bit ahead of myself here, but just kind of for you to kind of keep that in mind sometimes. I mean, just in case, I mean, if this actually works out. So yeah, keep your eyes on that one. But again, if you want to look at that, some lower area as well, we need that confirmation kind of reversal, and basically in a way, I mean, it could kind of, we need that confirmation. I mean, that's kind of end of the story, guys. We need that confirmation. We cannot really, let's say, just gamble here. I know that you sometimes like to kind of capture the peak or something like that, but just to be a little bit more on the safe side, guys, this could still pop higher. But yeah, that's why I kind of be very careful. Ethereum is moving nicely above this area. So I talked about this last week, and this 1666 territory. So we managed to get a nice move above it, and we managed to stay above it. And yeah, I mean, even though we're seeing a bit of a retracement here today, still we're trading above the 1666 territory, marked by the inside swing low here of the 15th of February. And yeah, in a way, for now, I mean, we will continue aiming higher here. We'll aim for this 1810 zone, and if that gets cleared, of course, we'll go for another, or should I say, we could go for another test of the psychological 2000 mark, or even above that. But again, let's not rush into anything. First, let's see if we can continue trading here above this 1666 territory. If we can, then yes, I'll aim for that 1810 zone. AUDUSD, NZD, yes. Now, looking at this picture here, we can see that the pair is still balancing above this 1.0718 territory, so that's kind of great news for the bulls. And this area now is just kind of proving itself to be a very strong one. It also coincides with the 21-day EMA, so everything's kind of leaning a little bit more towards the upside. So for now, that's what I'm going to aim for exactly. And if previously I talked about some of these levels, these are still on my radar, but the main kind of line here to target will be this downside line here, taken from the high of the 19th of January, and then we'll take it from there. For the downside, I need to see a break of this upside line here, a drop below the 1.0673, and then, yes, lower levels could be met. USDCAD, so again, this downside line, I mean, this one's drawn from the high of the 19th of March here, and I mean, it continues just to provide resistance. I mean, last week we saw this nice pop here, and what I said to you guys, that in order for me to get a little bit more excited with the upside, I still need that push above the 1.2738 territory. I would need to see that daily candle staying above this area, but I'm not really getting that yet. So yeah, I just got a test of it, but that doesn't really help for the bulls. We need that daily candle staying above this area in order to go for some higher levels. For now, yes, you can see exactly why, because we had a push higher, but then we quickly retraced back down and ended up being below this downside line. So yeah, let's stay a bit on the careful side here, guys, and let's see how this downside line is going to play out. GBPUSD. So here we have the pair drifting further south. So in a way, everything is kind of so far working with the idea which I've mentioned to you last week, that if we get a drop below this 1.3888 territory, then this opens the door towards these lower levels, basically opening the door for a bit of a larger correction to the downside. So, because don't forget that we're still trading above this upside line drawn from the low the 23rd of September. I'm still going to aim for these slightly lower areas here, initially aiming for the 1.3782, 1.3746, but if those get clear, then yes, the upside line here, a test of this upside line could be possible. And finally, EURUSD. So this one continues to drift lower. Of course, stronger dollar is not really EURUSD's friend. Yeah, I mean, it's kind of we're aiming for this 200-day EMA. I talked about this last week, that if we get a drop below this area, this 1.1950 to 52, somewhere approximately around here, then yes, yeah, I mean, I'm gonna aim for that 200-day EMA. I'm gonna aim for this maybe level here, the 1.18 zone marked by the low of the 23rd of November, and then we'll take it from there. For now, to be honest, there's not much to say. That so far everything's working according to the plan. We're trading below this downside line drawn from the high of the 25th of February. We're below this lowest point of February. So yep, in a way, everything's kind of pointing a little bit towards the downside. So guys, I hope you found it useful. Thank you very much for watching and listening. I really appreciate your time. I really appreciate your likes, guys, your views, your comments. So yep, thank you very much for being part of this video. If you want to catch my video later on, my Trader's Tea Time, that's 13:30 GMT. But for now, have a wonderful trading day. Stay safe. Have your stop losses in place, and yeah, everything will be fine. So, thank you very much, and bye-bye.